Welcome to Alpha Play Forex Trading School. Hi, my name is JT and I'm an Alpha Play trainer. Today I want to talk to you about the forces that move the currency market. If you have been trading for a while, you might have heard of the 4 pillars Forex trading methodology that my partner Kayong and I apply in our trading. Let me break it down to you. They are technical analysis, fundamental analysis, market sentiment analysis, and risk management. Now, of course, these forces that move the currency market are exactly these: technical, fundamental, and market sentiment forces. So what are they? What do they mean? Technical forces in the market often refers to the short-term speculative forces that you often see playing out in a small time frame. These movements are frequent and sometimes volatile. There are many theories and applications concerning these price movements, but for simplicity, I will categorize them into just 2 types. The first type is a short-run extrapolative price movements, or what we call momentum. The second type is a long-run mean reverting price movement, or oscillators. Technical analysis strategies that relies on moving averages and oscillators like RSI are often used to trade these forces in the market. Key characteristics of these forces include price respecting structures like trend lines, channels, and key price levels like support and resistance zones. Technical analysis is a viable strategy if used correctly and consistently. However, using technical analysis without knowing why it works isn't enough. There will be times when it fails and you must understand why, which is why we talk about fundamentals. Fundamental forces are mid to long-term cyclical and structural factors affecting the economic cycle. That's quite a handful, but put simply, they are the economy booms and busts, peak and trough of the business activities. You hear these descriptions and comments on a daily basis. Oh, the economy is doing badly, growth is slowing down, the inflation rate is so high, etc. My question is this: what are you doing with this information? Do you know you can paint a big picture with these economic indicators? You see, if you look at this big picture, it means you are also looking at the same data that central bankers use to manipulate currency markets, the very force that has the most power and influence to move the market. The mechanism here is pretty straightforward. Central bankers collect and analyze economic data and determine the performance of the economy. Based on these data, central banks decide then the monetary policy. These policies drives currency prices up and down. Based on this, you can almost predict where the market is heading towards next. And guess what? These economic indicators I was talking about were right under your nose if you know where to look for them. Your next step is to know how to use this information to profit in Forex trading. Finally, we have market sentiment. Ever wonder why sometimes your strategy just suddenly took a bad turn and you make a bad loss? Ever wonder why the market is so erratic and you just give up trying to understand all this Forex mess? Well, that's because the entire currency market consists of retail and institutional traders who are just as greedy and fearful and confused like you. The mechanism behind the force works like this: market correlation, market risk sentiment, economic forecasting, and to borrow Benjamin Graham's allegory, Mr. Market's emotion. These forces feed into the traders' expectations of future price movements and as a result, moving the current price. In the market sentiment analysis, we analyze capital flows and risk sentiments. We observe what other traders are thinking. And the catch is this: they are not always rational. When greed and fear grips the market, they do not care about technicals or fundamentals. We explore also correlations between currencies and commodities and how they behave against one another. A well-known correlated market is the oil price and the Canadian dollar. When price of oil increases, the Canadian dollar rises as well. But there is no change in Canadian economy. The increase in Canadian dollar is simply an expectation of what will happen in the future. Still confused what market sentiment is? Consider this. On 23rd of June this year, the UK called for the Brexit referendum, and we all know how that went. The pound dropped 15% in the aftermath. But what many didn't realize is that during that day when that happened, there is absolutely no change in the economic fundamentals whatsoever. The loss of pound was absolutely driven by fear. And that's sentiment playing out. Emotions can be a very powerful force driving market movements. Speaking of fear, you might be afraid to approach this big, messy world of fundamental analysis and market sentiment simply because you are not familiar with it. But that's exactly why you need to attend the Forex Fundamental Analysis and Market Sentiment Masterclass, where we will achieve the following. Number 1, demystify the market forces to help you understand the forces at play. Number 2, Add an extra edge to your trading by making use of economic data and reports. Number 3, improve your trading results by handpicking the best trades and taking away the worst ones. Finally, sound smarter than everybody else in your trading circle. Isn't that wonderful? My name is JD and thank you for watching this video. I will see you in the next Forex Fundamental Analysis and Market Sentiment Masterclass.